Hello. This is the mic test. Mic test. Let me see if the audio is going through. Let me see if the audio is going through. Yep, it is going through. So, hello guys, and welcome to the 62nd edition of the Trading Opportunities webinar. This is Nirav. I'll wait for a few moments while you guys join in. Make sure to say hi and hello in the chat. I'll just ready up the remaining setup. Mic test, mic test, mic test, mic test. Mic test, mic test, mic test, mic. Okay, so it looks like everything is working fine, and I'll just continue with the webinar as always, and you guys can join in anytime and let me know in the comments. So before we move any further, let me just quickly get done with the legalities here with the disclaimer on screen suggesting that all content presented here is for educational purposes only. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. Legal stuff out of the way, let me just quickly give you a very small introduction here. So as you guys have been following me for quite some time, but this introduction is for the people who are new to this webinar series. So guys, my name is Nirav and I'm the admin and owner of the website 50 Eyes Market Analysis, as you can see over here, as well as the YouTube channel 50. One second, let me check. Yeah, and as I was saying, I'm the admin owner of the website 50eyes.com and the YouTube channel 50 Eyes Market Analysis. And this is the 60-second webinar, which is being conducted on the weekly basis every Friday. I do these webinars and I do them always at 2 p.m. GMT. Right. Within the webinar thus far, we have covered 39 big moves we have captured out of the last 59 webinars. I should say 60 webinars, I believe. And what happened in the 61st webinar, we will check today. Okay. So this is for the quick rundown about the webinars we are conducting currently. Apart from this, I would also like to quickly point out that I have a track record of, or what do you call, I have compiled track record of all the work I've done thus far. And in the past years, which is starting from 2016, you can see the accuracy has remained above 80%. It takes a little bit of time for these sheets to load. 2017, 87.5, 2018, 84.6. As you can see, almost going to 90. Now, these track records are obviously compiled using the live webinars as well as the videos which I have uploaded. You can check them at any point in time. And generally in this industry, even a 50% plus accuracy is very high. So this accuracy I like to show off because it's many years and it has remained there consistently like that. With that out of the way, let's now head over and get started with the actual content here. Good evening, Madhavji. I hope you are doing well. And good morning, good afternoon, and good evening to the other guys who are incoming on the live chat now. So now I would like to just proceed because I think we do have an audience as well. First of all, on screen, we have the chart of Euro USD. Now we have been discussing a complex kind of move from this point of reference, but I'll just like to bring your attention to the bigger picture a little bit and continue our discussion from there on. So first of all, let's take our point of reference at the low around 28 September 2022, and the price is around 0.5939. From here on, what we have on screen is a possible impulsive progression in the upward direction. At least that's the way I have counted it thus far. Let me just quickly check again. Yep, that is the way we have taken this count so far. Now, in the context of Elliott Wave, an impulse is a five-way progression in the upward direction, which generally will look like this in the rough area. I can draw it. First leg up is called 1 and the correction is 2, so on so forth. The third is again in trend, which is up, correction again in fourth, and the last leg is again up. So this is the way we look at as an impulse in an Elliott Wave progression. After an impulse, we expect a correction in the market. And in this particular case, we seem to be having that correction. Correction basically is either sideways movement as a flat or a complex, or a downward movement as a triple zigzag, double zigzag, or simple zigzag. In this particular case, as you can see here, the market seems to be in a corrective structure. And as you can see, the market has sort of remained within a boxed range. It is trying to go above the range, right? But it has not done that successfully thus far. So that basically means that this market is in a sideways progression. Now, previously, we have been able to capture parts of this up leg, right? But overall, the count is becoming very, very complex. That's why I wanted to discuss the higher time frame structure so that you can get an idea of what's really happening here. Now, the thing I believe is happening here is that either the impulse of a higher degree has completed here and a correction of a higher degree may have completed. If it has, then we can see some correction followed by upward movement. Secondly, even if the correction is still continuing sideways, which is wave 2 of circle degree, then I still expect that the market will pull back before going higher. Right. So, long story short, in both the scenarios which I see on this counter, long trading opportunities are what I'm looking for. And personally, I think a little bit of a pullback will help us get a better entry. But if the market goes straight up, then also I'll be looking to take partial longs above the recent high, which is around 1.1089. And immediately, I believe the market will at least go to the target of 1.122. That's the immediate target I expect this market to take. Actually, it is 1.1229, so 1.123. But then again, as I said, we will not be doing any activity in this counter until we see at least a move higher than the last recent high or a proper pullback. So that's about it for our take on the counter of Euro USD. What the hell is happening here? All right, guys. So that's about it for our discussion on Euro USD. I think TradingView has an issue as soon as you create an alert. You cannot edit it for like 2-3 seconds. If you edit it within the first 2 seconds or 1 second of creating it, then it will give that error which you just saw. So you gotta wait for a few seconds and then you can double click on it and change it. So, anyways, something they should have fixed by now. It's been a long running issue. So, anyways, that's my take on Euro USD. And if you guys have any doubts, question, or queries, please do make sure to type them in the comment section. Also, if you are clear, please do make sure to type in understood, clear, or something in that line. And yes, guys, I'll make this announcement again, but before I forget it, or because some people do join in at different intervals, I just like to make it here as well. I made an update into the video course. I've added a very, very important section, and that section is the last section in the course actually. So if you are in the course, go ahead and check it. What I've done over there in the section is I have discussed one of the trading sessions where I made 120% returns in a single session. So 120% returns, all doing scalps intraday. So if you are interested in seeing how I use Elliott Wave on intraday, that is very low time frames and make trades on it, then I have discussed the whole day. And keep in mind that day was very active. I actually had 1900 plus trades in a single session over there, and all the trades I have discussed with the broker statement, so you can even check the trades and the ticket numbers and whatnot. It's a very detailed part, I think 2.5 or something roughly speaking. You can also download the broker statements and check each thing trade by trade. And it took me a lot of time, 15 plus hours, to get that small part in, because I had to check the statements, get the parts out, and then create that sheet and then decide what to discuss, what not to discuss, because it was becoming a little bit too much. I had to re-record some lessons to make them digestible. But anyways, long story short, single day profits 120%. I have discussed the whole day, and the lectures are around 2.5 hours. Hopefully, some of you have possibly even checked it. I think Madhavji has checked the part. He can probably let you guys know in the comment section here what was his view. But I personally think this is way too much value for the price there. This kind of content is something I generally discuss in my private classes. So go ahead and check it while it's there. Do not waste your time. Watch them multiple times. All right, I'll probably repeat this at a later point in time, but that was the quick announcement. One of the quick announcements. Let's now head over to our next chart, crude oil, where we seem to have captured a nice downward movement, as you guys recall or should recall. Where is that? Yep. So last time when we were discussing this counter, we were of the view that this market is possibly heading lower. The date was 28th of April, so somewhere here we were discussing this market, and the idea was that we had the idea that I personally thought that this market would go to the lower part of the white resistance level. That generally is the case if a market goes to the 50%, then mostly, not always, and specifically in crude oil, I have observed that the market has a high propensity to test the 61.8. And so it did, right? Which was all well and good, but this momentum was extremely strong and not suggesting that the market will stop there, which is exactly what happened. The market went on to make a new low, which means we have to update the accounts, which I have updated and I will discuss. But long story short, what I wanted to point out before we head further with our discussion is that we were able to capture this leg down, which is a good amount of movement. Even if you consider not the whole movement, then around 4.4% movement to the downside we were able to capture, right? So now let's head over and look at the high time frame. And 4 hours is enough. I'll just squeeze it in and see what's new or what is the update on this counter. So as such, this is our point of reference. Price is around 131.093. And what I do expect, or what I was thinking previously, was that we have a correction which ended over here possibly. There was another scenario that wave Z may have continued and is remaining, which seems to have been the case. But previously, that's what we assumed, that this is the low. Now, the updated count or updated look I have on this counter is that this is the W, this is the X. And by the way, we are still assuming that the market is continuing as a triple zigzag. Now, either the X is complete here or the X is continuing sideways, which will then be followed by a new leg down. So what is all this W's and X's I have drawn on screen for the people who are new? I'll just quickly point out that we are talking about a triple zigzag correction. In Elliott Wave terminology, the triple zigzag is denoted by W, X, Y, X, Z, and we have what you would call a wave Y down and a wave X. Now, after the wave X completes, we will have another leg down, which is called a wave Z, and it will take out the low of wave Y. So currently, this wave Y is over here, and we have already taken out this low. So that means theoretically and practically, the wave Z may have completed. That means that the wave Z may have completed in the actual chart, and the new price action should be to the upside. However, what I personally feel is that this wave Z is a little bit too small for this whole progression, and it is possible that either the Z itself is continuing, that is, we will see more downside, or the wave X is not complete over here, which was the case we considered previously, but it is indeed going sideways. If it is going sideways, then it will fall later on. So, long story short, is what we think is that if the market is going to go straight down, then yes, the downward direction remains as our H1, let's say. And H2, or the second hypothesis, is that this market will continue sideways before going down. So again, the downward direction remains as our primary bias. And as long as this bias is not relegated, which I believe should not be relegated as long as we sustain below 83.54, then in that case, we will say that we are looking for sell on a high opportunities. Basically, that means that every time we see a possible clear impulse in the other direction complete, we will look for some sell setups. So long story short, crude, we are currently not interested in long as long as the market sustains below 83.53 or 54, right? Personally, I will not be adding any longs just because the market goes up around 78-ish level. I will wait for the market to go up and then give me some sort of weakness or some sort of leg down, and perhaps then I will be interested in adding. For instance, if the market goes up and then goes down, then I have an opportunity to take this level as a stop loss. Just roughly speaking, not a trade setup, and look for lower levels as our target. So this will give me at least a higher than 1:1 risk to reward. So long story short, crude, we are looking for selling opportunities. Let me know, guys, if you have any doubts, questions, or queries on this counter before we move over to the chart of gold. So, Madhavji, if you are online, I would appreciate if you can share with the viewers here what was your take or outlook on the newly added section. Did it help you in your understanding of the markets and how to take intraday trades? I'm asking because that way a lot of more people can get benefit and get an outlook of what I do offer in the classes or the video classes offered as video course, not the personal classes. So, anyways, in that case, let's now head over to our next chart, which is the chart of gold. Again, a little bit of update here. Update in the sense that previously, when we were discussing this chart, we had a sort of different count. Let me see. Yep. I have seemingly changed the whole thing. Anyways, I do remember what the count was, and I'll just discuss it on the chart itself. The count was that we were not interested in longs until the market did not cross the recent high, which was around 2040. It did cross that. Longs were triggered, and it did go up a little bit. It was enough for us to capture some small intraday movements. So if you are an active trader, you would have been able to catch something. But what I want to emphasize now is not the small moment which we would have been able to catch, but the bigger move which is possibly forming right now. By the way, let me just quickly update the number of trades we have caught catching crude as well as gold takes our tally to 75 in the last 61 webinars. neat number. So, anyways, getting back to our discussion, what I was saying was that oh, there it is from Madhavji. So, as I was asking him, since he had gone through the part of the course which I just added, he's saying, I sure all learners can go through that section and will learn the experience of lifetime. Energy has captured the moves. Well, thank you, Madhavji, for letting our viewers know your take on the newly added section in the course. And again, guys, go ahead and watch it. I'm not just exaggerating it, it is extremely high value content. And you can also see the people who are already enrolled are telling the same. Now, with that out of the way, let's now head back to our discussion on gold. So, as I was saying, I have updated the counts a little bit. Firstly, let's just quickly look at the daily time frame and give you an outlook of the higher picture, or the bigger picture, I should say. So, in the bigger picture, we see that gold has a point of reference around the price of 2077 something, and the time is around somewhere in August. Yes, 10th of August, roughly speaking. So from there, we have two outlooks on this counter. The first outlook is that this market has gone down, followed by a flat correction, that is an A down, B up, and a C down. Right. That's the first take, and this basically suggests that we will see much more bullishness as this whole sideways to bearish movement is complete over here around 1612 price level. This point of reference around the date of 27 September, 29 September actually. Okay, so that's the first. Wave B is continuing, and maybe it is not finished over here, but it is probably finished over here. Now that gives a completely different outlook of the market's movement here. If this is the case, then we expect that once the wave B is finished, which I think is the case, we will see a leg down for wave C. So hence our bias becomes that short term wise, we are looking more towards a selling opportunity, and swing perspective wise, we will be looking for a long opportunity which will come once this wave C is complete. Right. So this is currently my main bias, or let's say hypothesis one. And because this is our hypothesis one, let's discuss that in detail. First of all, we think that the wave B is either complete or still continuing here. If it is complete, then it will be complete from this point of reference around the marker of 1676, the wave A up, a B down, and then a C up. Right? Let's now look at this part in detail, this full leg up in detail. Now, this is the updated outlook. I think that we may have completed the impulsive structure up for the flat completion of the wave C of a high degree wave B. Now, if we actually have done that, then we can see, or not can see, we should see a movement in the downward direction for the C as an impulse of the flat. Now, keep in mind, just to remove any confusions you guys might be having, I'm talking about something like this. The A is complete. I'm saying the B may have completed. And if this B may have completed over here, which is the price level around 2079 something, then we expect a wave C in the downward direction, which can go below 1810 and to as low as 1630. So we don't really care much about the target. Even in the worst case scenario, I think it will go to 1880-ish levels at least. So the downside is big enough. What we need to keep in mind, or keep an outlook, or push an alert for, I should say, is where to take short entries. Now, it is possible that this wave 5 may become complex. It may continue upside, as well as the fact that this wave B may not have completed here. But if it has completed here, then I personally will be interested in taking or looking to enter shorts below 1970-ish level, right? Conservatively speaking, the best strategy in these kind of scenarios is to wait for the break of the channel and then a retest of the channel. But that will increase the risk a little bit too much. For instance, if we wait something like this, it may or may not happen. But if it does happen, then this much will be our stop loss, and target, as I said, will be somewhere between 1880 or lower level. So it will give us a 1:1 kind of a trade, right? So that's why I'm looking for a little bit early entry if possible at all. And that's why I have an alert placed around 1970, which by the way is the same as we had an alert last week, same alert, right? So long story short, we are currently looking for a moment like this. Of course, we expect the market to continue lower because we expect it to be 5 ways movement. Let me just redo this. And this is just a rough outlook. We don't exactly know how long this market will continue. But whenever this wave C completes, we will be then looking for long opportunities. So gold, that's our change perspective and the updated outlook. Do keep this in mind. And I think it's definitely a counter to keep in the watch list because it has already given us a good trading opportunity in the last week, or sorry, not the last week, in this week. And I believe it will be giving us a very good opportunity in the coming sessions as well. So that's about it for gold. And yeah, one last thing before we move over to the chart of S&P's 500. This is the setup for downside, but only time I will be interested in longs is if it goes above 2070, because that would suggest that wave B is either continuing to the upside or something of that sort. But all longs will be very small or intraday, and I will be looking for getting in and out very quickly because the upside does not have much clarity. Eventually, I think the flat count is very good. So eventually, I think we should wait for a wave C down. That's about it for gold, guys. If you have any doubts, questions, do let me know in the comment section before I move over to the chart of S&P. So S&P is 500. Let me just quickly show you what has happened so far on this counter. Instead of no, preferably type something like clear or understood, because no kind of sounds odd here. But anyways, thank you for the confirmation, Devanataji. Let's now continue with our discussion on the S&P's 500. Now, as we discussed in the last webinar, let me just quickly point out, I have not changed the counts here because I just wanted to show you that last webinar was conducted on 28th of April, right? And one second. Yeah. So somewhere here, the last webinar was when we were discussing, and this was the analysis that I think that the wave 4 may have completed and this market is heading up for wave 5. So this was the arrow, and the price, as I said, was somewhere around 4130. So from then on, because the analysis was clear and already mentioned in live session, you can see that the market rallied. It rallied within 28th April as well as the next session, and the market has touched the high of 4189. Basically, we were expecting the market to take out the level of 4175, the last recent high. It has done that and just achieved the target, which by the way takes over tally of the number of trades which we have captured in our live market discussions, or basically this webinar series, to 76 trades in the last 61 webinars. Okay, now that we have updated that, let's quickly check what this market is possibly doing at this point in time. Now, one thing is clear here, that the bullish perspective is definitely holding strong. Now, how is this bullish counter playing out? Let's just quickly check. Now, I will update the whole thing very quickly here. So since the wave 5 possibly is completed over here, we are now possibly inside either a wave 2 or either the wave 2 is already complete here. So both possibilities exist. If it's complete here, then the market can just go straight up. If it's continuing, then it will go a little bit lower before heading higher. So we can check that as well. What is the corrective levels we can expect on this counter if the market continues down? So what I'm doing is doing the standard fib analysis, drawing the 50-60% retracement level of the impulse in the upward direction, which brings our corrective levels between the range of somewhere 3998 to 3953, right? So within this range, this market can still continue. If it wants to continue lower within this range, we can expect the market to go. And secondly, let me just also show you some of the, not some of the, one of the main counts that I have in mind here. So I'm thinking that if this market is going lower, it will most likely be as a flat, no, sorry, not flat, as a zigzag kind of correction. So in that case, nope, too many arrows. I'll delete this one and just use a single arrow. Yeah. So if it is really is a zigzag kind of correction, then actually the momentum currently to the upside is a little bit too much for a possible zigzag. But as I said, we cannot relegate it as of yet, as long as the market has not taken out the high of let's say 4187. The possibility of the zigzag continuing remains. Long story short, around the lower levels, let's say around 4075-ish levels, I'll be interested in taking some intraday or what do you call short-term selling opportunities, and targets will be between 4000 to what is this level, 3954. Let me just mention that. And as is quite clearly visible above 4170 something level, we will be looking for longs. So the setup is quite clear here. It will soon give us an opportunity, possibly near the end of this session itself. It might give us some trades. So again, S&P is doing things very clearly, and we definitely need to keep it in our watch list and keep scanning it for possible trades which will be upcoming. That was it for S&P's 500. And let's head over to our next chart, which will be of Nifty's 50. And yeah, guys, hopefully I'll just make the announcement afterwards instead of interrupting in the middle. So Nifty, as we can see over here on screen, we were able to capture the upward movement, which was discussed in the last webinar. We were saying that it will go up as an impulse. Let me actually check when was the last discussion. So 28th April, when the market was somewhere here. Actually, it had already achieved the upside target. So this is an updated view. So I do not exactly recall what was our discussion in the last webinar. Possibly, I think we were waiting for this impulse to complete, right? So I may have suggested upside levels, but you can check. I'll possibly check it later on and update here. But anyways, let's leave the past to past itself. But the current outlook I have is that I think that possibly the wave 5 has one more up leg remaining. Do keep in mind it is also possible that the wave 5 is complete here. But when the trend is so bullish, it is better not to assume a reversal until the market itself clarifies that. So yes, until proven otherwise, I expect that the market is inside a wave 4 of this double bracket degree. Let me just quickly zoom in and tell you what I think is happening here. So this is our point of reference on this 15 minutes chart. around the price of 17,553. Date is around 21st April 2023. And we seem to be having an impulse in the upward direction, and an Elliott wave terminology is an impulse is 5 wave structure with the double bracket wave 1 complete, 2 complete, and 3 complete. Now, as with anyone who has ever attended school, they know after 3 comes 4. And given the way these things are arranged, you can already say that the 4 will be in the downward direction. We now also have a suggested possible level. Generally, wave force will stop near 23.6 or 38.2. In this case, it has already gone below the 23.6, which was over here. This was the 23.6 level. And this, as you can guess, is the 38.2 level, which is coming around the price level of 1817. So as long as the market touches it and reverses, or touches and not touches necessarily, but reverses within this region, let's say 5-6 points above or 5-6 points below 1817, we can say that the 38.2 is achieved and the market is likely going up. That's why you can see this red arrow. Secondly, it's level we expect the market to go to. It's not necessary the market will go there. That's why you can see this CN color arrow, right? This basically suggests that the market can also reverse without touching the expected downside level. So long story short, on Nifty, as long as the market sustains or remains within this channel, this CN channel, or remains above, I should say, this channel, I will be looking for long trading opportunities. If the market closes below this channel or gives a sharp move below this channel, then I will change my bias, and we will have to assume that this count needs a little bit of an update, and possibly the wave 5 is complete. Right. So as I said, until I can see it from the market itself, I am assuming that longs is the main hypothesis here. And I'll just quickly push an alert here as well for exiting the channel. Okay. So I think that is quite clear here on Nifty. And I just want to bring the update to you guys now, because it looks like we have a good amount of audience at this point in time. So the announcement I have are two, and these are both important announcements. The first one is that I have added a very, very important section to the course, which is added as the last section in the course itself. And in that section, I have not discussed any theoretical jibber jabber. By the way, the whole course is practical, so you won't find any slides anywhere. So, anyways, coming back to the point, what I have discussed in the last section is my trades which I have taken on Bank Nifty in live market, of course. And I was scalping it the whole day, and that day I had like 1,900 plus trades in a single session, which was too big. And most importantly, that day, the let me see if I can turn it black. Yes, I can. So that day, the profits I made on the session in the session was, or were, I should say, very, very bad writing. I'll just use the tapping tool. So in that session, I made profits 120% within the single session. I had started the session with the, I think somewhere around 4.8 lakhs, and the profits were around 6 lakhs something. The exact figures you can check in the course. And the important things about this particular section is that I have added the live, not sorry, the trades were all discussed. What I have added is the contract notes are also present there. You can check all the trades with the trade numbers and what price the trade was executed, because the trades were so many. I have discussed this whole part in order blocks, that this order block is discussed, this part, that order block is discussed. So in that sense, this is an extremely valuable information. Generally, these kind of discussions I only do with the students in my personal classes. So do check it out. Secondly, I'm also thinking of starting a group where I'll be not only discussing the details of where I think the market might be heading, but also pushing in some of my trades in live session. And I will like to pursue it with a live public account. That is, we will also be seeing the progress of the account with the trades itself. So if you or any of you are interested in actually becoming a member of it, of course, do contact me. I will also update the details very soon, possibly in the next webinar or before that via email. And secondly, I am looking for a bigger fund to manage in this particular account. So if you are someone who would be interested in partnership kind of situation, that is the proper business, then also again contact me. So as I said, the idea would be that we will just be taking a big account, and instead of just discussing the analysis, I'll be pushing the trades live on it, and we will be seeing the progress of the account itself. So that's about it for the two announcements. I am currently thinking which platform to use for it. Either we are going to go for Discord, or the second I'm thinking is Telegram. So we will decide that soon enough. But you guys let me know which platform you guys use, Telegram or Discord. Again, you can use the comment section for it, or just contact me via the contact us page on my website. As a matter of fact, I'll just quickly show you where it is. So on the website, if you go to 50s.com, on the top, you will find the contact us page. You can click on it and just get back to me regarding this. And by the way, I'll actually suggest using the YouTube comment section because I asked this question on YouTube. So anyways, those were the two main announcements about the upcoming things that I'll be doing, right? I think it will be a very interesting and exciting project. That's about it. And let's head over to quickly our last discussion of BTC. No update, by the way, on BTC here. We previously were suggesting that this is possibly an impulse complete in the upward direction. We need to wait for a correction in the downward direction before taking any longs. No, as you can see, neither has this market corrected to the expected levels, which were around 25356 and lower levels already marked on screen. Neither has this market given us a clear alert, which will be if this market takes the high of 30,870-ish level. So long story short, Bitcoin, we will not enter any longs as long as it does not cross above 30,870. And if it gives us a correction till 25,333 or lower levels, then we will be looking for planning any possible longs. Basically, we will be analyzing the leg down, which if it gives, should I extend here, or maybe here or here. So, anyways, long story short is we don't have any trades on it, neither long nor short. Those interested in taking risky moves can add an alert above the last high. As I said, check it on your own chart because the data feed I use is not the one everybody uses. So just check whatever this last high is and push an alert over there. If it crosses that high, then partial long entries can be taken. And secondly, second alerts around below 25,333. Right. So that's the quick outlook on BDC. With that, I'll say we are done for this session. And as always, guys, make sure you check out the content I just mentioned. Make sure to check out the new section I've added in the course. And also let me know if your feedback, which platform do you prefer? Actually, I'll just type it in the comments. Which platform will you guys prefer for group? And we are thinking between Discord, and the second one is Telegram. So let me know, guys, in the comment section of the YouTube. Okay. And lastly, do not forget to share the link of this webinar after it's complete. And thank you, Madhavji, for coming in the webinar and sharing your feedback. Hello, Charles. Top of the day to you as well. Very late today, I see. And Madhavji is already suggesting that we go with Telegram, and Charles is suggesting that we go with Discord. So I'll just wait for more feedback from you guys and then decide on which app to, or which platform to pursue, I should say. Personally, I have use Discord a lot. That is where I put my private research. So I am extremely familiar with the platform, but oh hell, Telegram is even easier. There is no channels in it. So, anyways, guys, that's about it. Don't want to extend the time of this webinar anymore. Talk to you guys soon. Take care.